Welcome back into Mining Stock Daily, everybody. We're going to head back into the royalty space with our friends at Elemental Royalties. Two big news items that have hit the tape recently, not just their Q1 numbers, which we will go over pretty thoroughly here with COO Fred Bell, but also major acquisition in the royalty space with their acquisition of Vizsla Royalties, acquiring the royalty on that Panuco project in Mexico. More on that and the timing of it all and what it means for the bottom line for Elemental. But Fred, it's been a big couple of weeks for Elemental. Thanks so much for joining us and providing us some of your corporate commentary on this news. Good to see you.
Hey, good to be back, Trevor.
Yeah. All right. Q1 numbers, Elemental, not just operationally healthy, but actively generating the cash needed to fund transformational deals like you did with Vizsla Royalties. Let's go over the numbers. Revenue nearly doubled year over year in Q1 of 2026, $24.3 million versus $11.6 million back in Q1 of last year. What's driving that growth and how much of it is structural versus kind of timing related and kind of built in with that merger with EMX?
Well, look, it was a record for us in terms of the revenue number, but also importantly, the underlying gold equivalent ounce. So stripping out any movement in the gold price, it was a record in both senses. And I think the driver for that was the full quarter of the combined portfolio for both companies for the first time. And then at the same time, we had some good underlying performance from a few of the royalties underneath it. So I think that combination, and when you layer in the gold price that we were getting in Q1 at times, I think that's part of the reason you see such a strong number in terms of the geo conversion to US dollars.
Okay.
And I would
I
would just add as well that I think internally we actually have the second half of the year is expected to be slightly stronger than the first half. We have the Karlawinda mine expansion coming on mid-year. And we have the Chapi royalty that's ramping up at the moment. And we have the Gediktepe royalty, where they're moving from the treatment of the oxide stockpiles into the sulfides. So I think for that reason, it puts us in a 24 million revenue. And I think our guidance was roughly speaking 75 to 95 million. So for the year, so 24 puts us there. And our geo guidance was 17,000 approximately to 21,000. And we were 5,000, just under 5,000 geos on there. So I think tracking really well on that front. I would say our costs were higher than we would like them to be, and that's partly a function of having been very busy across the quarter on a number of fronts. We had the credit facility we refinanced, we had the TSX uplist, and we had quite a lot of work internally with the team, integration, making sure everyone spends time with each other, meets each other, different parts of the business, because we do have colleagues now in the three main offices of Denver, Vancouver, and London. So really trying to make sure that the team is working fluently and efficiently in the background.
Does it feel like that fluidity, multiple countries within the office space here for Elemental, is that kind of coming together? And what was that biggest hurdle that you needed to kind of get over?
Look, this is the second time we are doing a merger of two different companies. From my perspective, Elemental and Altus in the past coming together. And that was a really instructive experience in terms of how we integrated the teams and how we got things running. And the lovely advantage we have now is that we have a huge amount more experience and capacity and bandwidth, frankly, across the team. And so we can do a lot more simultaneously. And so we actually topped up a royalty that we already own on Western Queen in Australia, which is a gold project with Rumble Resources during the quarter, simultaneously with doing a few things in terms of the corporate reorganization internally, integration. We're sort of in terms of even things like our accounting software. This has been something we've been working on in the background prior to the merger, but now with the Q4s and Q1s underway, it's sort of moving our accounting software to something that is going to make it more efficient as well. So I think the general principle behind it is continuous incremental improvements in every facet of the company where we can do it. And those over time will compound and actually put us in a better position when you look to the medium and long term.
Okay. So we talked about revenue numbers Let's talk about operating cash flow. That went from 2.4 million a year ago to 14.5 million Q1 2026. That's a six-fold increase. Does this number, do you think, best captures what the company's actually doing right now, or do we, is it that number? What other metric do you and the team kind of have in the back of your head that really you want to use to represent the transformation of this company into the royalty space?
I think there's a few things that we would look at. The revenue line and that conversion to cash flow is a really important one. And again, I think that we would like to continue improving that margin in the company by capturing efficiencies as we go. And we've had one or two new people joining the company in the quarter, one or two retiring or in the process of. We've also got one or two more joining in June. So we're going to have I think a really strong team with even better experience across the board to take us forward. So that's one important angle is how we're going as an operating business, and that revenue number, which is almost the front of the shop. It's what everyone sees as they walk past in the street and they look in the window. That's the number they see. But the other part of it that I think is really strong is that growth profile. So to 2029, we had an organic growth profile of about 50%, looking at our portfolio. And that is coming from some of our cornerstone assets. So Timok, where we have a major expansion underway into the lower zone. And we are actually going to do a site visit there next month, and we will get an update from it at that point. But that royalty will be paying us a multiple of what it is with the lower zone and the upper zone simultaneously in construction. We have the Kohler Window royalty, which, as mentioned, will have about a 30% increase in production from commissioning in Q3 onwards. The Laverton royalty, another cornerstone, which is not yet in production. And look, that will be partial. Our royalty area will be partial coverage into the mine, but I think into the mine plan. But I think that has a potential, because it is a 2 to 4% top line royalty. That has a potential to be a really, really material contributor in the years to come, sort of 10 million, 15 million order of magnitude. So I think that will be a really good growth one. And then in terms of the pipeline, and we have assets like Diablios, which came from EMX, which is undergoing feasibility. We have the Pasofino, now Mansa Gold's Dugbe project, just acquired in the last couple of months, and they're talking about a construction decision in H2. We have the Mactung project, tungsten with fireweed, which is going through to feasibility next year. We have Viscaria project, which are looking at a construction decision in the next year. So when you layer on all of those assets together, I think it puts us in a position where it's not just the front of the shop, so to speak, that looks really good in terms of revenue, but actually behind it, there is an even greater, more diversified portfolio of advanced royalties that are going to come in the coming years. And that is not getting to the 200 of other royalties that have accumulated over time. And if I just touch on that, those earlier stage royalties, I mean, they include things like Peak on South 32's Hermosa, which is that copper resource they have within it.
Very active drilling there.
Really
I'm really
active,
excited about that.
Featuring a lot on that, and our royalty covers most of that resource, I believe. And there's a number of others in there that don't always get the front page. But I think that optionality has been accumulated over 10 years plus, especially if you look at EMX's case, of deals they have done, and that we are now going to be able to, in this market, I think, see even more activity and exploration and development going on across those projects. So really good headline numbers, really good at the top end of it in terms of revenue, the cash conversion and the margin is going to continue to improve. And then the short term, medium term, call it 2 to sort of 4 year period, we got a really strong growth profile, up to 50% organic growth. And then we have a much deeper portfolio, which I think is unlike a lot of peers our size, of 200 plus royalties at those various stages, who are having tens and tens and tens of thousands of meters drilling across them every year at no cost to us. And then lastly, if I pivot and into the announcement we made the day after our results on Thursday, which was the acquisition of Wiesler royalties and the Panuco royalty there, that is looking at taking us in 2029 from 50% organic growth to 75% organic growth from where we are today. And we are doing that in a combination of cash and equity. And when we close the transaction, we will still be in a net cash position, untouched credit facility, and we will be issuing approximately 11% of our revenue to get
Yeah.
28% of pro forma revenue through that acquisition coming in. And I think that the team on a technical side, very excited about the long-term exploration potential within the project. So that's a summary of where we are.
Yeah, very good. Obviously, we're going to spend a lot more time digging into the Visa Royalties transaction. But before we get there, Fred, one thing I do want to ask, and that's the kind of the absence of the Corelli Sud royalty from Q1. Can you walk us through what happened there and what investors should expect with that coming back in?
Yeah, so Corrali Sud, for those who aren't as familiar, is a satellite deposit to Allied Gold Sadiola mine in Mali. Sadiola is a tier 1 10 million ounce resource. It has not yet been a tier 1 mine in terms of production of 500,000 ounces a year. It was announced that Zijin are acquiring Allied Gold, and that transaction is still progressing. And it's been, I think, shareholder approval has been received. So look, for us, Corrali Sud was something that Allied rushed into production at the end of 2024. And we had an outsized contribution from it in Q1 last year because they got the approval to sell gold from our license just at the beginning of the quarter. So effectively, Q1 of 2025, we had a double quarter of production from the highest grade area at Corrali Sud going through the mine. And that was a big contributor to our geos last year. And then I think that what they have subsequently done over time is they got approval from the government to blend the ore. So initially they had to batch process it. So it was a different license. So they had to put through ore from Corrali Sud, or they had to put through ore from Sadiola. And they subsequently got approval to blend it and then commingle and then basically work out the attributable parts to pay. So that is positive for the royalty because obviously you want as much flexibility when you're mining as possible. They also announced the investment into the mine going forwards. So in terms of production, sort of from the end of last year onwards, we have less visibility into where they will be mining across the mine for them, but into and out of our royalty area. And I think that's particularly the case with Zijin coming in, who are likely to be reworking the mine plan and coming up with their own. And I expect will probably be even more aggressive in terms of investing into the mine, investing into the project, expanding production. But at the moment, we don't have clear visibility on how much comes in or out of our royalty area. So I think we are waiting for that transaction to close. And this will be now our going on for fourth royalty with either Zijin or Zijin Gold, because we have the Timok royalty, we have the Norton Goldfields in Australia royalty, we have now with Allied going in, we will have the Corrali Sud and also the Panuco royalty. So we have a number of reasons to touch base with Zijin, and as mentioned, we're doing a site visit to Timok next month. Where we'll get a really important update on that asset. But I think short term, one of these things with the royalties where we have partial coverage is the operator might produce exactly the same ounces. It just might come more or less in your royalty area. And that's actually something I wanted to touch on the marketing front as well. And I think that we have been targeting an investor day that we would like to put together for investors, particularly to cover a few of the assets where we have partial coverage, or where it is in the case of Timok in such a large company in Zijin that you don't always get the same detailed guidance. And so I think following the site visits to Timok, that will be a good time for us. And we also have done a site visit to Nevada Gold Mines Leeville mine, part of the Garland complex where we have a royalty and its partial coverage, because for the same reason, what they guide to 1 million ounces a year, whatever the number is, it doesn't necessarily reflect what we get. And so being able to go there, talk to the team on the ground and get an understanding of not just this year, but the 5-year outlook ahead allows us to guide much better and more accurately to our shareholders and stakeholders. And also we want to make sure that we have the confidence that everything we're putting out there, we're telling people, we can actually at that point in time, we have a pretty good understanding and knowledge of what's there. So that investor day we'd like to do in the coming period will help us, I think, and enable us to put out a bit more detailed guidance relating to some of these assets where they come in and out of the royalty areas.
Yeah, yeah, absolutely makes sense to me. We'll obviously share that news when the planning is structured and the date is set and access to that investor day is available. All right, Fred, let's talk about Panuco. Again, like, a lot to talk about, but this is a huge deal. Back a couple, you made the acquisition or announced the acquisition May 13th. Um, you are paying $239 million US for royalties on that silver gold project, the Panuco project. Feasibility study for that project, latest numbers, $1.8 billion post tax, NPV with 111% IRR. That's the base case. So the project economics are exceptional. You enter the deal, as you mentioned, with about $69 million in cash and 150 million undrawn credit facility. So you can obviously no problem, financing this thing or paying for it. But talk to me about the specific timing of this deal, because there has been a little bit concerns with safety issues there in Sinaloa. This Visa silver stock has just absolutely been hammered. It's been pretty quiet on the front. We haven't had any bad news for a while, so that's good to see. I'm still kind of waiting to get more clarification on the area, but talk about the timing and really the headline news and why you felt, if you were going to do this deal, you could do it now.
Well, the background is, and talked to this sometimes in the past, but I think the background is that we've known some of the management team for a while now, and mutual connections with some of our team and board members in the past, and I think we have followed the discovery, if not always at a corporate level, certainly at a personal level, the last
Hmm.
couple of years, and it's a fantastic asset. Technically speaking, geologically speaking, I think we've always been fans of it, and look, we have been talking formally and informally to the Wiesler royalty team, sort of since last year. And I think that when we, if you go back to the sort of time frame of Tether coming in June of last year, announcing the merger with EMX in September, announcing two acquisitions in the same month, closing it in going fast forwarding through to November Nasdaq listing, and then coming out into the new year. And we've had new acquisitions in that time. We've also had the TSX uplist, and we've had a few other things in the background. So I don't think it's. I think our interest has sort of been consistent in the project. And I think that the pitch we always made to the Visa royalty team, and we make it to a number of vendors across the board, is actually you can participate in the re-rate of your own royalty in a diversified portfolio like ours. And I think it particularly applicable to the Panuco royalty, which would be a
Hmm.
cornerstone asset for us going forwards. And when you look at our portfolio, it's not something that's static or in decline. It's something that's 75% with Panuco, 75% growth to 2029. That's enormous organic growth to have in there. We're paying a dividend for the first time, announced in Q1. We have probably 5-7 times the liquidity that we had last year, which always makes it an easier pitch in terms of saying to people,
Right.
we're giving you a liquid stock that is now NASDAQ traded, TSX traded, it pays a dividend. We have fantastic growth in there. And then, really importantly as well, is the quality of the underlying asset base. Because we have acquired royalties from people before for a mixture of cash and equity. And I think those who take equity, and 75% of the consideration here are shares and elemental, those who take equity, they want to understand the asset base. They want to know
Yeah.
that what they are putting in, they are getting shares in a business that has as high quality assets as their own. And in this case, you can look at Timok with a 60-year mine life. It would be one of the largest copper gold mines in the world, with the block cave at the lower zone underway as well. You look at Leeville, which we co-own with Royal Gold. You look at Caserones, we co-own with Franco-Nevada and with Royal Gold. You look at Karlawinda and Laverton that fit in the portfolios of any of the majors. You can go through the portfolio like that, and you can see that we already have a really high quality asset base. And I
Hmm.
think that that pitch to them around our equity offering them a compelling way to maintain exposure for their shareholders if they wish, but also offering an element of liquidity for those who would like it. I think that has become a more uh, compelling, attractive pitch for people as time has gone by and as we have over the last 6 to 9 months gone through major, I think, sort of step change in Elemental itself.
Okay. Can you help me understand management's decision when when this deal was kind of presented to Visa and kind of negotiated internally with Elemental? You know, you decided to use about 75% stock consideration to get this deal over. Can you help me understand how management has weighed the cash preservation versus the dilution to get this deal through? And obviously the liquidity helps. Um, kind of leverage the deal across it. But how did you kind of negotiate cash versus dilution when when you were putting this offer across the table?
Well, that's normally in our experience a two-way conversation,
Hmm.
and it's a question of really what would the shareholders of Visa Royalty like. And it is also a question for us from the Elemental side of what is the going to be the best and most accretive outcome for us. And we always felt from the beginning that some combination of cash and equity made sense. And it enables those who would like cash to take the option. It enables those who would like to continue to be shareholders to do it. And importantly, places like Canada, you can get rollover relief, so you can take your shares, for example, in Elemental, and you can typically get rollover relief. So you don't have a taxable event there, and that will depend on jurisdiction and shareholders and where they sit. But I think it was always a question of, from our perspective, equity and cash made sense. It
Hmm.
gave a liquidity option for those who would like it. It enabled those to hold to continue on, and then it was just a question of what was the best ratio. And I mean, from the Elemental side, we're fortunate in that we have a really strong balance sheet. We're cash generative strongly, and we also have a completely undrawn, upsized credit facility, as well as the shareholder support growing forwards to continue to grow the company, and continue to look to build it out. So I think it was a sensible position where we can offer the
Yeah.
best of both to
Okay.
shareholders there.
Panuco's feasibility study, when that was published, it targeted production in the second half of 27. Obviously, the events in Mexico, it's been pretty quiet from Visa Silver for the last 4 months. Is that production kind of time frame, is that delayed at all because of this? And how does Elemental kind of frame when, revenue, your revenue projection from Panuco kind of start hitting your books?
So look, we typically just mirror the guidance of the operator since they know best. I think Visa Silva have put that timeline at the moment as the end of 2028, 2027. Sorry, in their guidance. And I would note, importantly, during the last month, they did announce that EPCM contractor. I think they did announce a new hire last week as well, actually, on the
Mhm.
same day that we announced the deal. So yeah, they have said that they have been continued to be active in progressing the project, in the background. And I think that critically getting back on, back on the project and starting work on the ground, that will probably drive the timetable more than anything else. But they are extremely fortunate in that um, they have, I think, circa 500 million Canadian dollars in cash as of the end
Yeah.
of January. And then Vizsla Silver, being a shareholder, the largest shareholder in Vizsla Royalty, will also give them an element of cash and also shares in us, from a result of this transaction. So they'll actually be in an even stronger cash position, uh,
Good point. Yeah, yeah.
going forwards. And look, one thing I would look at when we sort of look at this project and what they've been able to do is, I think they have progressed it incredibly fast for a modern discovery. If you look back at
Yeah.
those maiden drill holes in December 2020,
Right.
and I remember talking to some of the management team when it was a very very new discovery back then, and to see them build it out so quickly and then do a lot of the very hard work in terms of drilling it out, in terms of development studies, in terms of actually getting it to this point, the financing as well. It's moved really, really rapidly to get to the position it's in today. And I think they've got one of the strongest balance sheets relative to market cap
Mm-hmm.
and
Mm-hmm.
for any of the developers out there. And they've obviously got one of the highest quality silver dominant assets out in the world as known. So I think from all of those perspectives, like it gives us a lot of confidence in this asset for the medium to long term. And when we did the merger with EMX, we were very explicit and we said for the market, we said we are looking to build this into a mid-tier royalty company. And if we do that, we cannot solely do it with $20 million royalties.
Right.
It
Right.
takes too
Good
long. It's not going
point.
to be that. We would like
Yeah.
some really solid cornerstone assets. And that
Yeah.
combination of our portfolio has created a number of cornerstone assets. I think the acquisition of Vizsla adds another really high quality cornerstone asset. And I would just say, in terms of Mexico, it is one of the best geological districts in the world in terms of silver exposure. I think we will still have less Mexico exposure than Wheaton. We will be broadly in line with a Franco or a Royal. And I suspect, just given the opportunity set we see as we continue forwards, we will probably end up with a lower Mexico exposure down the line through other transactions around the world as we have today.
Mm.
But I think that we're not sort of taking a single company bet on Mexico or that exposure. What we are trying to do is continually add high quality assets and have a really good balance of the geological upside and also the risk, jurisdiction
Yeah.
risk, development risk, timeline risk. And I
Yeah.
think this asset in production, it will be depending on the production is, but it will be an order of magnitude 7,000 geo a year royalty for us
Yeah.
in production.
Fred, me and my family, we are shareholders of Elemental. I'm really excited about the trajectory here over the next 3 or 4 years. Your annualized revenue today, about just under $100 million. Panuco adds $25 million a year at current gold and silver prices. This is your first big leverage into the silver royalty side, so that's exciting to see. But 2028, 2029, 2030, it's hard to see that maybe you're not just a mid-tier royalty company. Maybe you're something more than that. And Lord only knows what you have in the pipeline and the pathway towards 2028 and 2029. Um, I expect to see, us and looking back at these conversations, the foundations of what is being built for what the elemental to come. I mean, it just seems like the runway over the next 3 or 4 years is going to be incredibly, incredibly powerful.
Yeah, look, I mean, it is the first time in the history of the company that we have been in as strong a financial position as we are
Mm-hmm.
today. And then with the kind of support that we have from some of our major shareholders that enables us where we see opportunities that we like, where we see long-term value, where we see the opportunity to do things accretively when we can execute on it. So I think that, look, going ahead, this growth that we have in the portfolio, you've followed us for a number of years now, Trevor. There has never been a year where we have not been active in
No.
adding to the portfolio. Um, there has not been a year we have not been active actually growing the revenue side of the portfolio. So I think that this is the second deal that we've announced so far this year. It comes on the back of, alongside the combination with EMX, between the two companies, 3 other standalone royalty acquisitions that we did over that period. So really, since we've done that EMX transaction and since Tether came in, we've done 2. This would be the second corporate transaction, a major corporate transaction. We will have done 4 standalone royalty acquisitions, getting up to probably $85 million between them.
Mm-hmm.
We've done the NASDAQ list, we've done the TSX uplift, we've done the new credit facility. I think we will have continuous improvement in liquidity and a broader shareholder base as we go. And then we're also, for the first time, got our maiden dividend in there that we, will start to pay out. And I think we have given ourselves some room in that dividend as well, so that as we go, as a percentage of cash flow, it's lower than some of the larger companies. So it gives us some headroom, A, to keep growing the company aggressively, but also to improve on that dividend year on year.
Yeah. Okay. Fred, long conversation, but a lot to cover. Two big news items that deserved a little bit of attention, quite a bit of attention, actually. Good to see you, man. I can't wait for our next conversation here in the coming weeks and months, and all the best. And it looks like spring has sprung there in London, so hopefully you're enjoying some weather that isn't too wet.
Yes, definitely. And hopefully look forward to catching up with you in due course.
Yeah, thanks, Fred. All right, Elemental Royalty Corp trading on the TSX and the NASDAQ with ELE. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.